Hello and welcome back to my channel. Sorry it's been a while since a little bit of an update, but if you want an update on me and my life and my trading, it's going to be at the end of the video, okay? Right now, what we want to talk about is the strategy, like how do we fisk and proper milk Wall Street and take moolah so that we can actually afford our electricity bills and food and you know, petrol and all that sort of jazz. What do I do? What do I do? How do I make this super easy for myself? What I'm going to show you. I primarily trade with a funded account, if you want to know that. Link is going to be in the description. I also made a few video on the Funded Trading Plus. I think they're the best out there. I've tried a few of them. They're the ones that I like the most right now. I have videos on them if you would like to see them. Secondly, I suppose before I even get into the strategies, I think the biggest thing you have to realize is that most of the time, a lot of people put the priority the wrong way. They feel like strategies and indicators are the reason why they're going to be successful and not realize that it's all up here. And I know this is super airy-fairy to talk about, but I would honestly think that the trading is probably the only business that truly, if you do things like meditate and really be, you know, happy and at peace with yourself, you will do a lot better of a job. Okay, things like, you know, debts and families, relationship issues, you know, arguments, all these things will mentally affect you, especially if you're on a losing streak, because you're only going to continue to have losing streak and you won't have any confidence in yourself. So just be highly aware that, you know, it really is 10% strategy and things like indicators, like 2% indicators, and it's like 90% risk management and mindset. Okay, so that was one thing I wanted to get into. So what do I primarily trade? Like, how do I trade? I literally trade simply support and resistance. I make this so easy for myself. I make drawing zones so easy. My entry criteria is so easy. My risk management is so easy. Okay, I want to make it so easy, because if you do any more than that, you're just going to be over analyzing paralyses. It's not worth it. So I'm going to go over, okay, what are actually supply and demand zones, or support and resistance, or, you know, whatever the hell you want to call it. I'm going to show you, as I said, how to draw the zones, how to trade from the zones, and just a few small little things as well on top of that. So let's get into it. And just before we get started, I've actually created a free Telegram group. The whole point of this is it's almost like a journal for myself. So I'm going to use it for daily analysis, trade ideas, and it's not signals. Like, I'm not going to be telling you when to buy and sell, but I'm going to be giving you ideas of what I'm going to be doing myself. Okay, areas of interest, what I think is going to happen, and where I'm going to be, you know, roughly taking interest of where trade could possibly happen. And hey, combine those ideas with the trading system I'm going to give you right now, you can make a lot of money. So if you want to join a group, it's going to be the link in the description before we get started. Okay, actually, just join it now, and like the video and subscribe before you even start as well. You may as well, like, you know, that those buttons are looking real lonely. Let's begin. So first thing we're going to talk about is liquidity. One thing you have to be aware of. Second thing we're going to talk about is what actually is a supply and demand zone. Then we're going to do how to draw them and how to trade them. Okay, 4 things, super easy. Was that 4? Yeah. That's all we want to do. We want to break them down one at a time. Okay, so first thing you need to be always wary and worried about is what's called liquidity. Liquidity is essentially orders. Okay, so when you look at a market, you have to ask yourself, right, I want to base my trade around places where there's action happening. You don't want to be fiddling with yourself in the middle where there's not much action and there's consolidation happening. You want to base your trades around areas where there's orders built up. So if we looked at this right now, okay, anybody that's going long to breakout trades, you can see there's a top. My head is in the way. You can see that there is a there we go, we have a top here and we have a top over here. So like, anybody that's trying to do a breakout trade is probably doing this. All right, pretty obvious, right? They're doing that. Anyone that's doing a reversal trade, they're probably doing this. Okay, so what does that do? If you have millions of people doing this, it means there's a lot of orders built up in this area. So your job is to jump and piggyback off those orders the same way the banks and the big institutions do. So when a big institution wants to buy 100 million worth of this or that, they can't just buy it at any random point. There isn't enough orders, because if I buy something in the stock market, there has to be someone selling it to me. If I all of a sudden want to buy 100 million of something at this one point in time, there probably isn't that much volume happening in the market in order to take that order. So what'll happen is they'll get partially filled. So like, let's say if there's 100 million, there's like, if they place it right here, like before the top here, where all these orders are placed, maybe 20 million might be put in place. And then if they go a little bit higher, they might get another 20 million in. And this is what happens to big institutions. So that's why they rather just place their trades around areas where there's huge amount of orders laid up. So then they don't have to worry about being partially filled in this, that, and the other. No, I'm not a banker, and I'm not personally doing trading for them or anything like that. But that's essentially how the market works. Okay, so we want to be piggybacking off of that. So we want to find areas where that could happen. So now that you know about liquidity, again, always just be wary of liquidity, because if you draw a perfect zone, but there is like a lot of like orders placed right, obviously you're not going to be able to see these orders, but if you say to yourself right now, you know, you have this like perfect zone, let's say like right here, you know, let's just say your zone is right here, but you have to remember that there is a lot of shorts that have their stop loss right here. So again, keep it in mind. If you get a perfect entry here, take it, but just know that here is not as high of a probability of the one above because of the liquidity that's lying there. A lot of the times the market likes to take that liquidity and then move in the opposite direction. Remember, banks need liquidity to move. So if they don't get enough liquidity here, they're going to take it on the next liquidity point, which is your next order block or supply zone or whatever the hell you want to call it. Everyone calls them differently. So how do we spot them, okay? How do we spot them? Very, very simple. The market's in some form of a consolidation and it breaks out up or below. So we have a consolidation here, okay? All right. And we're waiting for it to break aggressively in one direction. That's all. It broke aggressively in one direction. All right, didn't it? So we're in the 1 hour chart right now. You can do this on a 15-minute. You can do it on the 1 hour. I'm just showing you in the 1 hour, but I would normally do this in either or. Okay. Sometimes the 1 hour blocks are really far apart. So if you want to get more plays, then use the 15-minute. But the 1 hour blocks will have a higher probability. They're just bigger zones. Okay. So all I'd say to myself right now is, excuse me, we had aggressive selling to the downside. We broke previous structure, meaning we broke out of or either consolidation or we just broke a higher broker or low, but it has to be with force. Okay, it can't be like this old like drips and drabs crap. It has to be a break with force that tells us there's a buyer that stepped in the market or a seller that stepped in the market. What do you do then? You look at the previous high before the move actually started. Okay, so we had selling here, buy, big selling off. You could have an argument's sake that this is the zone right here, because usually it is the previous candle before the big buy or the big sell. All right, but remember, did we not just say about liquidity? So this could be a zone, and also I would also take this into consideration as well. I would just have them in mind. Lower probability, higher probability. Okay, remember liquidity here. If the liquidity is taken, all the orders, remember anyone who got short from here all the way over to here have their stop losses literally placed right there. Okay, some of them have it placed up here. So you just have to remember that liquidity. Okay, it is one thing you get is just that there's orders placed everywhere, and sometimes your zone that is perfectly drawn out might not actually be so perfect because there's a lot of orders resting that the market needs to take. Remember, banks move, institutions move based off of orders, markets only move based off of orders. So if there isn't enough orders in place, it ain't gonna move. So if it doesn't get enough here, it's gonna take it from the next high before it fuels the move down, or buyers take over and it goes up. Okay, so basically you find your zone, you find your aggressive candle, and you take the bull candle if it's a sell, the previous bull candle, the entire candle. Some people just do the body, but I take the wick and the body. Again, this is the 1 hour chart. I am giving you bigger zones here. Okay, remember, I'm giving you bigger zones, but if the zones are too big for you, go around to the 15-minute and you're going to find them the same way. Okay, so if I'm in this one, look, this is the last bull bar before the big sell. If this was going long, it would be a sell bar and then two big bull bars or one big bull bar. So let's go into the 15-minute and see if we can refine it even more. Okay, so if I was refining this even more, I would probably either take this point right here, so that would be about 30-40 points, or you could just take the candle here, okay, the one above beyond it. It's completely up to yourself. These points are not set in stone, they're just areas of interest. That's all. You have to understand it. They're areas of interest that you could possibly make a trade. Same with here, okay, look, the last big bull candle before the drop down right here. Now this is just personally me, if we're near a top, I normally like to bring the top involved in it as well, just so I have an idea that the top is close. But in reality, that's the actual box, okay? Same here, okay? What's the last bull bar right before the big sell? Right here. So now we've technically refined our zones, okay? Let's go back to the 1 hour just to place the trades. Look, I'm going to place the trades on the 1 hour and the 15 minute, but you can place them on any other time zone. I'll show you. I'll show you on each one. So that's basically how you would set your zones, okay? And all you do, okay, all you do is do this. It's not working for some reason. It's not leaving me place. That's very strange. It's not leaving me place an alert. But that's all you do. You literally just place an alert here, and when you get back to that point, I will show you what the entry criteria will be. And that's it. You just wait. Sometimes when the market goes all the way down, then you have to say to yourself, right, okay, the previous high is over here. We consolidated, we broke it again. Well, guess what? We have another zone here. So, previous bull bar. Again, because we're near the highs, I would normally just bring the highs into it as well, just to be safe. And that's your next zone, okay? If price doesn't come back there and just starts dropping again, you keep doing it until you find a zone that works, okay? And you wait for price to come back. This is what I do. Some people, when there's big gaps like this, they might get one of these Gantt boxes, okay? Which is basically just a top and a bottom and a midsection, a 50% line. And what they do is they take a fair value gap and they enter in this point. But again, I just want to make it easy. I just want to make it one strategy, one thing you can try out, and that's it, okay? If it doesn't come back here, we don't do anything, okay? And then basically what you do is you just wait. You literally just wait. If it creates new structure here now, if it goes up and breaks back down again, well then guess what? You create another one, okay? Has to be big selling, remember? And guess what? We have another one here again. Okay, so we have another one up here. So that's technically the box, but I'm going to make it to the highs again, remember, because there's probably liquidity sitting here, remember, and that's probably how I would do it, okay? And then what we do is we wait for it to come back. Wait for it to come back, okay? When it comes back in, you go down to your lower time frame for an entry, but it has to come near it. If it doesn't come near it, up. We literally just missed our entry. So we have a 1 hour tap in, okay? We go down to our 5 minute. We have two entry styles. We have aggressive, all right? We have an aggressive, and we have, if the aggressive one fails, you go on to the second one, okay? So the aggressive one is we need a tap inside the zone, but then it needs to come straight back out with a red candle. So tap inside the zone, okay? We didn't close inside it, and it needs to be a red candle outside the zone. Nope. Nope. Red candle outside the zone. Then what we do is we enter here. These trades, you can be stopped out quite a lot, but the risk is so small and the reward is so big. Okay, you could be stopped out in 5 or 6 of these trades, but one of these trades working out will make it all worth it, okay? So unfortunately, you might have a crap win rate, but those wins are going to be mega, okay? Literally, you have two options. You either put it literally at the high, which was what I normally do, or you use the whole box. This is too big of a stop loss. You can see here the stop loss is over 113 pips. Not worth it. I will normally put it at the swing high, or if there was a big candle down, I would use this candle as my stop loss. So let's say if it was a big candle down, I would literally put it like that for a sniper entry. But because the high is so close, I wouldn't mind doing that. Now, what you normally do is you target the previous, the next kind of low. Next low is kind of here. This is the last point where it kind of hesitated. You could also target down here as well, but this is the last point where it hesitated, okay? So see what happens. That came way too close. Okay, we got it. We got it. Okay, so what I like to do, remember the concept of liquidity, okay? A lot of the times these markets, what they'll do is they'll come down, they'll test the zone, they'll break it by 1 pip or 2 pips, and they'll go straight back up again, okay? So what I will normally do is I will normally place my take profit right at the point, like right at the point. If I'm a bit nervous about it, then I will put it a bit higher. Okay, simple as that. But I put it right at the point. You've seen it there. And you see the way it broke and just went straight back up again. This is why you target the lows right at that point. A lot of people, what they'll do as well is they'll go like this. Like, oh, if it breaks, it'll break by like 20, 30 pips and then it'll reverse. Like if I did it at this occasion, I would have just missed it. So I always put it right at the break, right before the break. It's just much easier. So that was a win. That was 129 points. You could be done for the entire week there, you know. So this is one thing you have to kind of keep into consideration. So that is kind of like essentially how it works. You find your zones, you wait for it to come back. An aggressive entry is if it goes in, it taps and comes straight back out again. Okay, I want to find a I'm going to find my second entry type. So what normally happens, if it fails, it will go into the zone, and I will wait for a trend line to form, and I will target the break of the trend line. What I'll do is I'll find that exact setup right now, and I'll show you. It happens quite a lot, but I don't want to be trolling through this for an hour not to find one. Here was another zone that literally appeared. So that was our first setup here, okay? We came back up to test that zone again, and we broke back down. Now, one thing I have to say about this is that if a zone is tested multiple times, 9 times out of 10 it breaks through that zone. You have the highest success for this strategy is if it comes down, it comes up, test your zone, it comes straight back down again. If it comes down, it comes up, test your zone, you get a good trade, and it comes back and test that zone again. A lot of the times when a zone is tested more than one or more than twice, it's going to break through. Resistance to support gets weaker the more it gets tapped. Doesn't get stronger, so you have to be very careful. So in this situation, we came down, we came up, we tapped it. We're in a slight uptrend right here, okay? We're in a very short-term uptrend, so it tapped it for a third time and it broke through. So just be very careful of that. I normally would only use a zone maybe once, twice max if I feel like it's going to work out, but most time it's going to break through. So that's one thing. So we came up okay, but look what happened. We almost got back up to this zone. We didn't, and what happened? Massive selling pressure. We broke back down, and look, we broke a previous low. So that means we technically have a zone right here, but then we broke another zone here, which gave us another entry in another zone. Look. So that zone was broken. We came right back up to test it. And if we go to our 5 minute and use the protocol that I just said, okay, remember, so we remember what I said, this aggressive entry only works if we tap into the zone and come out. If we go straight into the zone and hover inside the zone, don't use this entry type. So we came into the zone, we came straight back out, red candle formed outside, entry, stop loss at the break of the high, and then we literally target the low, which is right here, which is almost a 1-to-2 trade. Okay, not amazing, but you know, we could have technically, you know, gone down even further. Remember, it's just the next support and resistance, next place where the next place where the price hesitated previously. Okay, so that could have been a zone. That could have been a zone. This could have been a zone. This could have been a zone. This could have been a zone. If you were starting over this strategy, always pick the first zone. Try to at least get a 1-to-2 risk to reward. You know, 1 to 1.8 is not bad either, but try to get a 1-to-2 at least. If you get a 1-to-2, settle with that until you get really comfortable with the style. Okay, technically this would have smashed the whole way down, but again, that was another perfect entry. Okay, remember, 1 hour aggressive selling, broke a previous low, which is right here, broke that low as well, came back up, touched the zone, came straight back down again. Okay, so that I've shown you 2 aggressive entries. Let me find a one now, which is going to be the trend line entry. If I literally just played forward, actually would have been a perfect one. So our first entry was here. We nailed that one. First entry was this supply and demand zone, which was based off this, worked perfectly. Second one was based off of this, worked perfectly. Excuse me. We basically broke through. Remember what I said. First one is high probability. Second and third, low probability. Look what happened. First one succeeded. Second one failed. First one succeeded. Second one failed. I would, again, be just so careful of that. Sometimes you can get away with a second one, but I generally don't like doing it. Unless it's like a triple top or a quadruple top, and it's literally the highest point that price has been in a long time. Down here, we're not. We're fiddling in the middle as opposed to, you know, whichever. So here's a perfect entry, okay? Here's our 1 minute zone. It's a pretty big zone. We could have made it smaller. But again, I want to show you how this one works. So let's say, all right, let's say, we came in, we tapped out. Here's our aggressive entry. We know we failed it straight away. But look, aggressive entry lost you 19 points. Now, it starts going in, coming back out. Nothing closes outside. All these candles are half inside, half outside. This one closed outside, so it was a valid entry. It came up. Now, This is when we use a trend line. Okay, so we grab our bottom, we grab our top. Okay, we get a trend line. We want at least 2 touches. So we got 1 touch there, 1 touch here. And then you want to get in short on a 5-minute candle that closes outside the trend line. Super easy. Has to close outside the trend line, okay? Not half in, half out. So look at these ones. This is still inside the trend line, not valid. This is still, it tapped inside the trend line. It's not valid. This one went back inside the trend line, not valid. This one is outside the trend line and half inside the trend line, not valid. This one is outside the trend line, fully closed, not near it, valid. Entry, stop loss. I would normally put it right above this 5-minute candle, but because we have, like, again, this is up to your trader's intuition as well. Okay, 7 7-point stop loss is absolutely tiny. Like, if you want, you can risk a little bit more. Like, if you bring it up to here, it's less than 20 points. It's nothing. You know, it's €20 if you're using one contract with the minis. But then it skews your risk to reward. So again, let's say we pick the high here, and then they're targeting the previous low, which again is here. Remember, I wanted to break, and then what do we see? We smashed it. Okay, even if we did the whole using the last 5-minute candle as our thing, this would have been an insane trade. Okay, but you're just targeting the previous low, right? The more you get advanced at doing this, okay, so that was a trend line break. Again, it needs to be diddling inside. It can't break above the zone. Okay, if it breaks above the zone, then this entry isn't valid. We're still inside this zone. The trend line is forming inside the 1 hour zone. The second it breaks, 5-minute candle has to be outside. Can't be half in, can't be half out. Break. Enter in the first 5-minute candle that is after the red candle outside. Stop loss can be either right here, or it can be above the previous zone. You could, like, again, if you start using ones like this, you're going to need way higher risk to reward. I just don't think it's worth it. I much prefer to, like, do this and do that. And if I get taken out, then I do it again. I try it again. Now, if you get taken out of this trade the first time, I wouldn't be too comfortable with it. That probably means that it might chop around for a while. So you just have to be careful with that. So those are 2 entries, okay? If it goes inside, taps out, we have an aggressive entry. First red candle outside, 5-minute. And not 1 minute, has to be 5-minute. If it closes inside the zone and starts diddling inside the zone and starts creating a trend line, get a trend line, the first 5-minute candle break outside, and that's essentially how it trades, okay? So that's essentially how I'm able to pass these evaluations so quickly. On my funded trading account, I passed it within a day, and it's simply because I wait for these setups. Okay, it might take a bit longer. All right, it might take a bit longer. Look, you can try scalping, you can try all these things, but unless you can get one strategy right and be good at it, at least this one it teaches you patience. Okay, so find your zones on the 1 hour or the 15-minute. It doesn't matter. I showed you on 1 hour. If the zones are too big, you can make them smaller in the 15-minute. I showed you 2 entry types, an aggressive entry style, which works quite well, and I showed you a trend line break one. Those are the 2 ones that I use. I don't use any other ones besides that. And you see in there that they pretty much worked out perfectly in those situations, but that's what I've been using for a long time. Okay, remember, when you're looking for supply and demand zones, it has to be really strong break of structure in opposite direction. Remember, this is the one that we actually found here. Has to break out strong in one direction. Now, there is an add-on that can help you, okay? Now, again, I'm not a huge advocate of plugins, but this can help you quite a lot. It's called a Smart Money Algo Concept, Lux Algo. So it actually plots out these lines actually for you. But you have to determine if they're good or not, okay? Now, if you open up this plugin, right, there's tons of other stuff. There's a lot of Smart Money Concept stuff inside it. I don't use any of it. I don't use, like, they have all the break of structures, the change of characters, all this sort of stuff, but I don't use them. I do leave on the show strong, weak, high, and low. So you can see here, look, it's showing a strong low and a weak high, meaning that if this low breaks, it's a high probability it's going down. If this weak high is a higher probability that it's going to break through this. Okay, it's a higher probability that it's going up than it's going down. So these things can help you. The other stuff in it can as well, but essentially I literally just have that on the internal order blocks, and I usually have it on 5. I don't like any more than that. There's loads of other stuff as well that you could use, but I don't use too much of the concept stuff besides what I just showed you. So essentially what you do is you just wait for you do exactly the same thing, but remember what I said. Not all all zones are valid, okay? And this can be a very good indicator as well to tell you to stay out of the market. So if we see the consolidation that we know there's a consolidation here, you can see that a lot of them are starting to overlap on each other. If you're starting to see a lot of these things overlapping, it's a good indication to stay out of it, okay? Again, watch what happens here now. See, it's just overlapping on itself. It's not really doing a good job at this point. But remember, we did have a breakdown. And remember, I drew one here and I drew one here. So it works out quite well. Remember, this is the 1 hour. Now, if you go down a time frame, it's going to show you the order blocks based off of that time frame. So what I used to do was I would stay on the 1 hour. I would find a block. It would help me identify it. I would draw it out. And then I would just turn off the indicator. And then it would give me some nice zones to work with. So if you are really confused, it can give you, like, look, it came straight down to this order block. And look what happened the second it hit this order block. It started to hesitate for a while. Now we know it's going to continue to go down, but it's good to have an idea of these locations. Okay, watch what happens now. Boom, breakdown. Look, it created that order block that I created a while ago as well. Now look, there's bullish order blocks here as well. Now I would literally, as I said, when you're trading this style first, I would just pick a direction and I would do trades based off of that direction. Once you get more advanced and better at trading this, you can start being a bit more fancy with your entries, and you could go, like, you could be here, look, oh, there's a demand here, it's low probability, I might try and write it back up to this support. But when you're first starting out, pick a direction. Look, it was consolidating, it broke down, it broke to the downside, look for shorts. Okay, don't try and do this whole, oh, I'm going to guess the bottom, I'm going to guess the bottom, I'm going to guess the bottom. When you start playing that game, it gets very dangerous. See, look, you just guess the bottom, it keeps breaking down, look. But look, see here, look, broke to the downside, came up, created order block, went straight back down again. Perfect entry on that one. Okay, went right through that one. Now it's just playing around. But you can see how it just starts creating them in real time. So it's a really good indication to just, you know, see, look how close it came to that one there. And it's going straight back down again. And look at that. It bounced off that bullish order block and went straight up. Now, I actually have the colors turned off. If you have on the colors, it will actually show you the blue means bull and or red means bears. Okay, so you can see here it literally did them perfectly. But look, it's one of these things that you just have to trial and test. Obviously risk management is going to be number one, so I do have other videos on risk management, have a look at it. But essentially this is a strategy that I use. I wait for high probability setups, I use a tiny stop loss, the rewards are always huge, and that's it. I literally, because obviously this is the 1 hour chart, these zones are set, I literally set an alert and I just walk away. If you're in front of the charts all day long, you're going to start taking trades you don't want to trade. Just set your alerts, mark up your zone, say to yourself, right, okay, mark this zone, I like this zone, so I'm gonna put my order block here, and I love this zone here as well, and I'm gonna place a short here if I get one of the aggressive entries or the trend line entries. If it doesn't work, I'll wait for the next zone, delete the zone, wait for the next one. You might have 4 losses in a row, losing 10 points, 15 points, 10 points, 15 points, and then all of a sudden you get like a 150 point runner. That is the key. Okay, and the one final thing I'll say about how to take profit. All right, remember, when you're first starting, just take profit at the next support level. So again, look, let's say we got in an aggressive entry, which would be in right here, which is actually another perfect play. So let's say that was your support right here, okay? But once you get more advanced, what I would do, okay, and this is what I recommend you doing in the future, is that in your first take profit, take half of what you have put down. So if you have five contracts, take 2.5 off the table. Then the next place where I hesitated, look left, that's the next place where I hesitated. Take a remaining half of what's left. So if it's 2.5, that's 1.25 that's left. And then leave a runner, go all the way down to the absolute bottom. Okay? That is the best way to maximize. And the last tip I'll give you, once you have hit take profit 1, again, if you are just a beginner, full profit taken here. If you are a bit more advanced, you're getting a lot more comfortable with it. The second you hit take profit 1, half off the table, your stop loss gets brought to break even. But stop loss can only be brought to break even when you've taken TP1. Okay, so that's essentially how we trade. That's essentially how I trade. I know it's a lot to kind of take in at the start, but it's definitely something to just consider. Download the plugin, look at what the plugin does, and just take those entry types. Okay, keep it super simple for yourself. Some people have other entry types as well. Some people use RSI divergences. Some people use patterns, head and shoulder patterns, and you know, some people just do break and retests. There's so many different ways of doing it, but I just found this is what works best for me. Use the 5 minute, use the 1 hour and the 50 minute for your zones. Enter aggressively on your first one. If that fails, wait for a second entry. You know, always have a small stop loss, and your winners will always overshine your losers. Okay, but they have to be valid entries. Don't just take them willy-nilly, because a lot of these zones will be tested, and that's one thing you really have to consider. Okay, so thank you so much for watching. If you like my style of how I actually do these sort of things and you want to learn more, well then of course subscribe and like the video. Remember, we do have a free Telegram group, or I'm going to be sharing my daily analysis. I'm going to be marking up charts, showing them to you. It's up to you to take the trades. You can take this style of trading and try it yourself and let me know if it works. But I will be giving all my kind of daily analysis every single day on what I'm going to be trading, whatever I'm going to be trading. Okay, I'll be making another few videos on a few kind of spot targeting strategies that I have. I have a few like random ones for specific times, like the New York Open and the London Open. I have very specific styles of trading with that. This is what I trade 99% of the time outside of those times. Okay, so mostly everything comes from that. So thank you so much for watching. So how my journey has been going so far, by the way. So I obviously have a funded account with a Funded Trading Plus. Everything's going really well. I was about 2.5k in profit, lost about 1,000 I think it was, and unfortunately I haven't been fully trading the Funded Trading account for a while now, almost two weeks or so, and the reason is because we had a death in the family. I'm half Filipino myself. My nan in the Philippines died a few weeks ago, actually around the last time I uploaded my last video. So the reason why I haven't been trading too aggressively with the funded account, because the funded account for me is like almost sacred. I don't want to ruin it, and I wasn't in the right frame of mind. I had to organize a lot to go over to the Philippines. Now she lived a great life. She lived to 99 years old. So again, it's the reason why I haven't been aggressively trading it and trying to. I've kind of just left it there for the time being. I'm going over to the Philippines in a week from now, actually a few days from now. I'm going to be over there for 2 weeks, but once I come back I'll be pretty hardball going into trying to get that as high as I can. So I haven't taken a withdrawal out or anything. I want to get up to almost 20% profit before I do, but as of right now it's kind of stagnant, and I've been using my TD365 account, which I use for scalping, and that's what I've been kind of using. But I've been using really small size on that. I don't want to play with big money until my head is perfectly straight. This is the best way of putting it, really. But I'm still in the stock market. I'm still doing some stuff, but getting vaccinations and getting all my stuff ready all at last minute was too much. And this is why I was talking about at the start. Psychology is so important. If your head isn't 100% in it, like every single day I was like, oh god, I have to go get this, I have to go get that, I have to go get this. It's too much on my head, so I didn't want to be doing really big trades or anything. So that's essentially what's been happening. But I will be picking it up big time once I fully get back. I have another few videos in the works coming out, but I just wanted to get this strategy out. Sorry how long it was probably quite long, but again, hopefully this helped. Join the group, and we'll hopefully make some money together. Thank you so much for watching. Like, share, subscribe, and all that funny stuff, and I'll see you in the next video.